So it is suggesting 17,329 one should buy and 17,251 one should sell. And these kind of days when there is a 300 point or 400 point of gap down, this is almost a 300 point, or you can say 1.5% or 2% gap down actions any day you are getting a 1.65%. So it is 1.5% gap down. So there will not dilute the principle, will slightly change it. So change our entry points. So what will be the entry point? As per the Fibonacci, it says that 0.236 sets the trend. So this is the 0.236 level which sets the trend. Means trend starts from here and 0.382 confirms the trend. So this is a set point. So set point and this is the confirmation point. So in Bank Nifty, we are doing the entry from 0.382. So today also you can make an entry at 0.382. Reason is volatility is a, whenever the price falls, volatility goes up. They have always the inverse relationship. So here 17,354 level you should buy the Nifty and keep a stop loss 17,226. And here too, you need to hedge it with the 17,350 put option or 400 put option or 300 put option, any of your choice. But I will suggest go with the 17,300 put option purchase. So 17,300 put option you will be buying if Nifty gives a upward breakout, which will be 17,354. So once it crosses that, you need to buy Nifty along with the 17,300 put option. Suppose Nifty is giving a downward breakout 17,226. So if this is the breakout you are getting, you must sell Nifty here. Along with that, you buy one 17,200 call option. 200 call option. So monthly options you focus on, weekly options always has that degree of error. So weekly options will always give you the degree of error. So this part you have to very carefully understand. So today is a very critical day. So there is a gap down action, huge gap down action, 1 to 1.5%, more than 1.5% of gap down action. So here 0.382 should be your point of buy entry. 0.382 level should be the point of your sell entry. So this must be respected. So if you alter that, then it can create the problem because stop losses will trigger. So many of you has told me that stop loss is triggering from the past couple of days. So whenever you are seeing that kind of external influence is in place, there is a Federal Reserve interest hike is coming or such kind of things is there, then you have to just change your views. So we are not altering any principle, only what we are doing, we are just changing the entry point from 0.236 to 0.38. And Bank Nifty already is in the 0.382, always I used to recommend. So 38,488 level you should buy and 38,141 level you should sell. So if you are buying at 38,488, you must hedge it with one 38,500 put option purchase. 38,500 put option purchase. So this is the simplest hedging. So do not think that this is the all hedging is only buying an option along with the future. So this is the simplest hedging. You can think of selling, you can think of making some complex hedging to protect furthermore. So this is the simplest hedging. So if you are buying a future, buy a put option. If you are selling a future, buy a call option. So that call option or put option, think about just out of money or at the money options. And if volatility is too high, go for the in the money options. So this is the Bank Nifty and Nifty level. So once we get the breakout only, we can enter that trades. So enter the trades. You can see here, just a few minutes back, the Nifty has given 0.236 uptrend breakout. If you could have entered at 0.236 uptrend breakout, then by this time it would have been returned to its point means original position and the position could have gone in loss. So these are the things is very important as a trader. Whenever there is a huge gap down or gap of opportunity, so you must say that huge means how much? 1%, 2%, 3%. So imagine it is a 1.5% in the index and stock will be having a plus or minus 3%. So in this case of gap down or gap up actions, you must take a trade at 0.382 level. And here too also one more thing I will suggest all of you to do. So though we are just taking these two methods, our summary sections always have a look here. But the summary section suggests. So that is very important. So for Bank Nifty, it is saying that all studies are neutral now. None of the studies are saying to buy or sell. So it is a waiting situation for all. So forcibly do not enter the trade. So here the Fibonacci study, volatility study, one standard deviation study, GAN study, all four studies are suggesting that it is a neutral. So currently it is neutral. So today also will be taking on the natural constant, which is our 2022 innovation. So here 2022. So this is one of the innovations Smart Finance has brought. So Prem will discuss about the natural constant and how to trade on the natural constant. So Bank Nifty data is already loaded. So so here all tabs are being given. So anybody is using the software, you can say that any one tab you can just hit on, you will get that level. So 1SD we are following, it has a bigger success ratio. Same way, natural constant also is a very good method for intraday. It gives a excellent success. So here natural constant means we are using the pi, we are using phi, we are using square root of 10, square root of 2, e. These are the constants. So if you are student of mathematics, you will be knowing there is a e, there is a pi. So pi is 22/7. So there is square root of 2, square root of 10. So these are the golden ratio is nothing but Fibonacci 1.618. So this is the mix of all. So you can say pi, phi, all those things. Their presence is there everywhere in nature. So these constants are having a presence everywhere in nature. In your body also pi is present, E is present, 1.618 also present. So your finger bones also is measured in 1.618. So if one finger bones length someone knows, he will tell you that your other finger bones length is how much. So this has a natural presence. That's why they are known as natural constant. So WD GAN has given a thought about that, how to utilize this natural constant in trading. So we have worked on it and we have decoded this principle, and it is an excellent principle. So Prem will discuss now about the trade entry process of Nifty and Bank Nifty using natural constant.
Yeah, good morning everyone. I will explain you about when to enter and when to exit and what will be the stop loss for this one. Yeah, okay. Now we have been loaded for the Bank Nifty, right? The gold mean top will be your entry point.
Golden mean.
Yeah, golden mean top where you can enter in 38346. And then if you enter in this, your stop loss will be this, which means decay trend. Gold mean bottom will be your stop loss. Where like the same way, if you want to sell this, same way if you want to sell me, which means you want to sell the Bank Nifty future, you should buy at this entry.
Sell it.
Yeah, sell at this entry, and then your stop loss will be this one, which means 38,346 will be this one, and then your targets will be goes on like 38676 and then 38436. Like this, it has been goes on. In the same way for the second cycle also, it has been goes on.
So Nifty.
Yeah.
So now we'll be loading the Nifty and he will be demonstrating about the Nifty. Load, symbol. Nifty.
Okay, I am loading the Nifty data now. Just after selecting just click on the load. Okay, after the load has been done, you can just click on the NC trend tab where you can then find out where to enter. In the same way for our client for the Bank Nifty, in the same way you should enter in this gold mean top, which means in 17301 you should enter, and then your stop loss will be the gold mean bottom 17 278 will be your stop loss. In the same way for selling also. If you sell here, your stop loss will be this one, which means 17301. In the same way goes for second cycle and also for the third cycle.
So here, once one cycle completes, say 17,301, you have bought it. It is all our future levels. Nothing is spot level. Spot never trades. So we are choosing here Nifty expiry. Spot is not having any expiry. So all levels, whatever you are getting here, all are trading levels. It is not hypothetical levels. Spot levels are hypothetical levels. Nothing you can do by watching these levels. So here, what happens? 17,301. If you are buying the Nifty future as per the natural constant method, your stop loss should be 17,279 and your first hypercycle target will be 17,333. Once you cross over that or first cycle is completed, then you will be entering to the second cycle. Your second cycle entry or says you have achieved this target. So can you quit the trade and wait for the higher targets or second cycle? So here as per this particular method, say 17,333 crossed over. We are moving higher. So what happens here? First trade, very carefully listen to this. First trade when you enter 17,301. Your stop loss was, though hedging should be there, stop loss was 17,278. So this was the stop loss, 278. So once the price crossed over 17,333, then you have entered to the second cycle. So here you need not have to close the original trade. Price has entered to the second cycle. Just stop loss you have to change. Your stop loss should be, once it entered to the second cycle, your stop loss should be 17,301. 17,301. So this will be the stop loss for the second cycle. And you will be waiting for the golden mean crossover to happen, 17,344. If it happens, goes to hypercycle 17,376. So say it goes to the third cycle. If it goes to the third cycle, then your trailing stop loss will be 17,344. So this is how you should trade based on the natural constant in case of a wild volatility situation also. So this is an excellent tool and it works perfectly. And have a look at the intraday top and bottom. So today you can see that we have created a Nifty top and bottom. So if you just look into the low of the Nifty, 17,250, and currently it is creating a high 17,339. Recently it has gone to 17,349. So as per one standard deviation, only entry is advisable above 17,350 that we have discussed in the first part. So now, based on this reading, have a look here. We have, through the gap down action, we have created the 13th cycle bottom. So intraday bottom 17,250, which has happened in the opening action only. So it is the 13th cycle bottom. So you must say me, once this bottom is created and price is moving up, so these price points are very, very high resistance points. So 315 will be a resistance point. Next will be 17,355. If this crossover happens, then there is a possibility 17,402 you can get. If this 402 crossover happens, you can go to 17,459. So you can just have a look here. So this will guide you towards throughout the day what will be the resistances you will encounter if the trend reverses and goes to the positive end. So all positive move, all bounce back from the bottom will create resistances at these points. So this is a very big guiding post for you for the intraday. And coming to the monthly top and bottom, so this August month we are still running. So that trailing wise, if you can see, there is a top and bottom also would have been changed now. So now approximately 17,000, 18,000 to 12, this was the top is being made sometime in the past. So near to 18,000 we have come. So from here, so retracement is happening here. So retracement is happening here. This is monthly. Monthly top and bottoms has, so you can say here it has gone to 56. So this was a resistance point. Few minutes back I was telling you 17,355 is one of the intraday bottom. So there you will get the resistance. So once it comes to 56.85, it has retraced. You can experience that. But 350 breakout has been given. If you want to enter a trade, buy trade along with a 17,300 put option hedge, you can enter. So, but these are the, now 356 is being validated, 355 we have calculated, 401 will be the next resistance will come. So this intraday top and bottom will guide you towards that. Now coming to this monthly top and bottom. So monthly top and bottom, we are now retracing from 18,000 level, and here you can say top reversal has come, and successfully these two levels are being penetrated, 0.618 and 0.786, and price is near to gone till 1.618, 17,230. So if you are a uptrend trader, and if you are thinking from 29th of August to 29th of September, if I want to buy the Nifty or sell the Nifty, based on these readings, very carefully listen, based on the readings of the monthly top and bottom, if you wish to buy the Nifty, this is not the time you should buy the Nifty. From this bottom, once the Nifty crosses 17,714, this level, then only buying is possible. And if you buy here, it may make a different or new top. New top is not possible until and unless Nifty maintains below 17,740. So till these two price points, you have to be very, very careful. Until and unless this death zone price point has not crossed over, there is no hope for the Nifty to bounce back and create a new top. So if it bounce back and create a new top, then you can expect 18,400 or 18,700 also. This is monthly data, 29th of September to trailing 1 month I am using. Monthly data, 29th of September, August to 29th of October, 29th of September. So today we are taking on 29th of September. So it is till 29th of August we are setting today. Sorry. So it will be valid till 29th of September. So have a look at this monthly top and bottom. This is a fantastic level you have to look into, and based on today's data also, this is top from the Nifty top. It is being created 18,012. You would have seen very recently it is being created near to 18,000 level in this month. So today, as per this reading, the bottom is broken. First bottom is being created 17,300. Today it is created 17,250. Also it has gone. So now we have to see that if today's closing happens below 17,300. Do remember this. Today's closing, 29th of August closing happens below 17,300, then you can expect the Nifty to create new bottoms, and those bottoms may vary till 17,000 point. This is the point 2 level is very valid, 16,600 to 16,704. So this method already we have given in our video. So in our YouTube channel, you can find it out. So
this tool is useful for actually for the intraday buy trade and also like short-term investments trades. I want to say again, this tool is useful to make the trades in intraday buy and also short-term investment. So we have the 5 important points which we should be noting on that we can trade and get the profit in this using this tool. So I want to explain this. So it's been like classified in three types with the based upon the volatility. So it's a first one is rise in volatility, and second one is fall in volatility, and the third one classified into no change in volatility. So we have rise in volatility, where it's been again symbol and volatility correlation Z score. So I want to discuss with the 5 points which I want to say using to get the profit in this using this tool in the trading. So first point is where the stocks which are actually having more than 60 correlation. So in the rising volatility, so are good for intraday buy trade. So the stocks which are having 60 correlation more than that in the volatility, rising volatility, so are good for intraday buy trade. So we can see the
Example.
example Tata Motors. So we have above it actually it's 86.396. So and then the second one is like VEDL. So where you can see 80.913 correlation. So these are actually good for intraday buy trades. And second one is I want to tell about the stocks which are 60 correlation more than like in the falling volatility. The correlation is more than 60. So where it is useful for good for short-term investments. So you can see the correlation points over here and the symbols which are being classified in this table, fallen volatility. So you can see if it is like more than 60 correlation, so they are good for short-term investments. And I want to discuss about third point. So the stocks which are having less than 60 correlation will give less return as compared to Nifty, and will give less success in intraday trade. So I want to tell again, the stocks having less than 60 correlation will give less return as compared to Nifty, and will give less success in intraday trade. So, and the fourth point is stocks having more than, now we're gonna actually see into Z score. So we're gonna see, so the stocks having more than plus 1.5 Z score point. So in rising volatility are good for intraday buy trade. So we can see here in rising volatility table. So the Z score is plus 1 point, more than plus 1.5 Z score point. So we can see it's good for intraday buy trade.
So here 2 points is telling. One is the correlation, second is the Z score. So both should be in your favor. So here you can see that we are having a correlation of 86 in Tata Motor case. However, Z score is 4. Z score is 0.79. That to negative. So that is not good for your intraday trade. So two parameters will be evaluated. So if you go for the Asian Paints, it is having Z score of 85% as well as correlation of 85%, Z score also 1.73. So this is a perfect candidate for intraday. So this is a perfect candidate for intraday, and if there is a uptrend today, in fact it is a downtrend market. In case of a uptrend market, these stocks gives you better success. So here you can say that SBI Life Insurance, it is 73% of Z score, correlation 74%, Z score is negative 1.62. So if it is a negative 1.62, it is a best candidate for selling, intraday selling. Positive means it will be intraday buying. Next, negative also intraday selling. So Jindal Steel 79% Z score, 79% of correlation, 1.58 is the Z score negative. So it is the best candidate for selling, intraday selling. So these are for the stocks which will be best suitable for intraday selling. So two parameters you have to look into: correlation as well as the Z score. Positive Z score, correlation favorable, good for buying. Negative Z score, correlation favorable, good for selling. So this is how you should do it. And the stocks which will be in the falling volatility and also favorable Z score, so that will be good for the investment. Good for investment. It should be positive. Say Bajaj Finance, it is calling it coming at 86 and 1.54. So this is a good for the short-term investment. Whenever we are talking about short-term investment, it is only for monthly investment. Monthly investment. How you can initiate the pair trade using our beta decoupling pair trade tool in the Smart IT. So that will be explained by Gautam. So he will be using the pair trade interface of the Smart IT tool. Pair trade interface of the Smart IT tool.
Good morning, all of you. Gautam here. Today, I'm going to demonstrate our pair trade software, which is included in the Smart IT. So, basically, a pair trade means you have to choose a pair of symbols first. Let me load the data for the selected symbols. I'm choosing ICICI Bank, HDFC Bank, Axis Bank. And first, I have to load the data, and it will analyze the result based on the net beta decoupling and correlation. First, in the first screen, we are seeing in pair trade trend. Here we have a volatility values of Axis Bank, ICICI Bank, and HDFC Bank. And the uptrend levels also we have, downtrend level also we have. The right side we have a positional pair trade analysis report. By default, it will give you the positional trade. Positional trade means maximum 10 days only you can hold the position.
Minimum 3 days.
Minimum 3 days. 3 to 10 days only you can have them. And here we have a pair trade table. Okay. This is we are seeing here Axis Bank and ICICI Bank pair. It is recommending to buy. With all the calculation, it is recommending to buy.
So here the studies which is being considered are Johnson's alpha, Sharpe ratio, Trenner ratio, beta decoupling, also alpha and correlation. So these are the studies 1, 2, 3, 4, 5, 6, 7 studies are being considered here. So however, the spread analysis and correlation are not the prime studies. So here you can say 5 studies are very, very important. So here what you are getting, Axis Bank is recommended by 5 studies to buy and ICICI Bank to be sold. So here what it is telling, the software itself is telling buying Axis Bank in the range of 738 to 741.3 and selling the range is this. So this point you have to purchase one lot of Axis and sell one lot of ICICI. So there your pair trade is being formed. So here second question comes whether you should hedge that trade or not. So here the spread analysis is recommended, correlation telling that you can initiate this trade without option hedging. Without option hedging, you can initiate this trade. So this system itself will give you the complete study, what to do, whether to hedge or not, and which one to buy and which one to sell, when to exit the trade. So it is not only telling you the entry process, when to exit the trade. So if the trade is not favorable for you, then when to exit the trade. So when to exit the trade, that also will be given. So here Nifty we have bought at 17,350 above, hedged it with 17,300 and put option, and now it is 17,387. Almost your first target is being achieved, and you can say here natural constant also we have made. So 17,397 level it has come for the cycle 3. It has 394 level, it has 93 level, it has gone. So very close near to the third cycle also you have achieved, and similar actions also you are getting in the Bank Nifty. Be careful while in a gap down day or a gap up day, your entry should be at 0.38 to retracement. That is very important. Normal days you can make it at 0.236, but on gap up or gap down day, you need to make the entries only at 0.382. So in front of you, the target has been achieved. And if I go back to the readings, so not only the targets, the readings also is very important, very important. So here what we have achieved also is very important, 17,392.75. This is what the calculation has happened. You achieved till 17,393. From there only the retracement is starting. See the approximity of this level. This is being calculated when 393 was not at all on your chart. No chart can show you 17,393. So however, this calculation has happened 0.618. The red color is being given there. It is a reversal zone, and the retracement is happening at 0.25 paisa. 25 paisa above it is going and coming back, and you need to trail the stop loss. And since it is a gap down day, you can trail the stop loss or you can book the profit, anything you can. So again, going back to that pair trade analysis, like I have told for ICICI and Axis, now Gautam will again discuss about other pairs.
So we have a 3 pair of analysis. Second one is Axis Bank and HDFC. It is Axis Bank. You have to buy as per the recommendation. We can buy.
2 studies are telling to buy, 3 are telling to sell.
And HDFC, 2 studies are telling to buy, and 2 studies are telling to sell. And here also we have buy entry, exit alert. HDFC you can buy at 448 to 453 levels, and you can hedge this option with put option.
Earlier pair, what you have got, there you can have a look at these studies. Earlier pair, whatever you are getting, there no hedging recommendation was there because all are favorable. But here for the other pair, whenever you are paying, so here correlation say that trade not recommended, spread analysis trade recommended. However, system is telling, even though if you enter the trade by buying HDFC Bank, you must hedge the HDFC Bank with a put option. So hedging is recommended here. Why hedging is recommended? Because here all 5 studies are not in favor of buying or selling. So that is why it is telling to hedge. The system guides everything. Only thing is that you have to load the data, look into that part and make a choice out of that. So here another pair is ICICI and HDFC once you go. So here too also it is being, HDFC is being recommended by 4 studies to buy, and correlation is telling that trade recommended with option hedging. So this also suggests you to hedge. So if you are a follower of this tool, which is using our beta decoupling method, as well as correlations, as well as all multiple alpha Sharpe ratio, Jensen's alpha, Trenner ratio, all things it is considering. In this case, the best pair out of these 3 will be the first one. So here 5 studies, no, all 4 studies in favorable, Axis is buy, ICICI is sell. So hedging also not required. It is a very smooth study, very good condition is there. So the same condition you won't get in the other 2 pairs. Suppose if I am going for say TCS and going for Infosys, and so all 3 stocks should be equal. So same sector. So Infosys and Tech Mahindra. So I am going for 3 IT company shares. So I am just loading the data. It has 2 features, intraday and positional. But intraday is very rare to get those pairs. However, we'll just have a look at here Infosys, TCS and Tech Mahindra, what it is suggesting. So here the data has got loaded. You can see the volatility level of 3 stocks. There are uptrend terminations and downtrend terminations. So here you can see the Tech Mahindra and Infosys combination. The Tech Mahindra is being recommended to buy, Infosys to sell, and that too also hedging. So when I go for the Tech Mahindra and TCS, so here too also recommended with the hedgings. So these two also 2 and 3. So not a complete. Infosys and TCS, if I go, Infosys is sell and TCS buy. That too also with the option hedging. But the best pair, if I can say which one I should enter, I should sell Infosys, buy TCS, and I should go with the hedging. So here correlation is slightly poor. So there I have to, correlation is slightly poor. You can say so correlation is poor. So for that I'm going for a hedging. So this tool is highly efficient if you are going to do a pair trade, and as you know, pair trade is one of the excellent method for the large traders, those who are doing a huge quantity of future trades. Pair trade is one of the best method for them. You can utilize our Z score method for also for a pair trade in the Nifty and Bank Nifty. You can say Bank Nifty and Nifty also you can utilize this Z score method. So you can just double click on the number, you can get the fresh Z score. So this Z score is as per the last Friday data. You are getting this Z score 0.6877 as per current data, current 29th August data. So using this Z score method also you can do the pair trade. However, beta decoupling, Z score both gives the similar success, and this is one of the best method for trading. So we have discussed today how to do intraday trade using the natural constant and natural constant and 1SD method. Using the natural constant, you have achieved Nifty towards the fourth target. Same thing also is being visible in the Bank Nifty. Using the one standard deviation along with the option hedging, we have achieved. So the uptrend, though there is a gap down day, but uptrend breakout given 17,350 above, and it has achieved till the first target 17,393. So 392.75 was our first target. So we have achieved till 17,393. So similar, it has many other features like you have an option scanner. We have taken it in the earlier session. As I said to you, we have intraday top and bottom. Then again I said to you 17,402 is the optimum resistance for the day, and we have achieved till the 13th cycle of the intraday trade. So that also I have shown you, and also I have told you that the top and bottom, the trailing 1 month top and bottom, after forming a top of 18,000 level, we are retracing, and till the Nifty has not given a breakout above 17,714, the hope of bouncing back for a month till 29th of September is very rare. So if Nifty gives a breakout above 17,714, the positional monthly trader can buy Nifty future for a target of new top which will be above 18,012. So probably it can go to 18,400 or 18,800. So these two methods also very important. So that gives us the clear indication that where we are lying, that monthly top and bottom will tell where we are lying, what will be the monthly trend. The intraday top and bottom will tell that whatever the targets we are meeting in a intraday level or intraday basis, whether those targets are falling in line with any of the top. So that is also very important. Suppose you can say if it is coming to 17,402, so expecting 17,421 is a foolishness. So we can book there and come out, because 17,402 is one of the resistance point, and it has created a 13th bottom in the intraday level, so which is very prominent bottoms. And as I used to say, first bottom, if it has given a breakout, then the fifth and seventh it will be the targets. So now the way the fifth and seventh are the target, same way the fifth and seventh will be the biggest resistance. So if you recall the all old recordings, repeatedly I have told, in intraday top and bottom, whenever the first cycle top is being formed, then the fifth and seventh cycle is the ultimatum. So same way, whenever the first cycle bottom is being broken down, then the fifth and seventh is also ultimatum. Here we have come till 13th cycle and bouncing back. So these two price levels will act as a toughest resistance for the day. So toughest resistance for the day. So this is how, this is also is a very good thing. So Prasantji, if the Z score is negative and correlation is favorable, it is good for sell. Z score positive, correlation favorable, it is good for buy. Softening of the target. So target is secondary. So the data points is very important. So targets is being calculated in front of your eyes. So the data points is very important. We did not tell the market to retrace from 393. The calculation has happened. Market has respected it, accepted it. So that is very important. Whichever the method you follow, so it may be the technical charts, graphs, indicators, oscillators, anything. Market must respect it. Market must obey it. Then only it is known as a proper forecasting method. What is a proper forecasting method or correct forecasting method? Whatever you calculate, market must oblige, accept, respect that calculation. So that is very important. So this you have experienced today. So with a very short span of time, it has 17,350 breakout given and achieved the first target. And the intraday top and bottom also is very, very important. Small announcement to make here. So we have given a couple of offers for Independence Day, and those offers so here those offers is we have given that some offers for Independence Day. So that offer is no more. However, I'll be again going to that link. All of you will be knowing that link. But if anybody has not known to that link or anything, then you can. So I have sent that link to. You have sent me. So here this is the link, and this is the offers we have given. All softwares of Smart Finance you can get at a discounted price of 12,980. Those who want only one standard deviation and GAN software, they get at a discounted price, and full package also had a discount. So it is still for the webinarians we are providing that. So I'll be sending that link in the chat box. Those who are interested, they can procure that product at that same discounted rate if you are interested. And those who are the buyer already bought those products and using that, if you have any kind of query, please feel free to ask us in the WhatsApp or through email. So we'll be glad to solve your issues. So with this, I'll be ending today's session. Thank you very much. Thank you for your time.